You there, Keith?
Yeah, I'm here.
Okay. I think we dropped connection, then got back on. But if price action was to drop down here over the next day or two and it broke through this 532, then we would no longer be in an upward trend. At that point, I would be looking for a retest and then drop downs. That's another story. But right now we're looking at trend continuation trading. We identify this is in an upward trend. We wait for price action. Now the next rule, let's move on for the rectangle. This is the part you wanted to talk about. Remember, our rule is recency. The most recent major swing level. Where did price action break through? It broke through right here. So that's where our eyes want to go to create our trend continuation. So that's wherever the most recent price action breakthrough. That's where we go for continuation. And I'm just gonna put a triangle right here. Move across here. I like to now another one. There's no real objectional way to talk about this rectangle that I'm putting up here. But this is a zone, and I like to say you always definitely want to capture the major swing level that got broken. The most recent major swing level that gets breaking is where your eyes want to go to put your rectangle across. Your rectangle is just a zone. Therefore, I can't really tell you how big it should be or how small it should be, but you do want to look. You want to look at the data back here for frequency, because here's where some resistance was right here. Price action came up here and stopped. We don't have anything more real recently. If we go back here, we probably will find something, but you definitely want to get your eyes over here to where price action is going to come down into the zone, maybe tomorrow or maybe the next day over here. This price action is going to come down into the zone. And then since we are on an upward trend, like we've identified, price action is going to go back up. So we all know how stocks move. They don't just pull down or they don't just go up, like a straight line. They always, pull down. It's like a lightning bolt, right? They pull down to pump higher. And this is called trend continuation. So if you look across the board, you can see what happened right here. We had this impulsive move up. Then what did price action do? It pulled back down. Where did it pull down to? It pulled down to right around here. It pulled down to this zone. If I had a rectangle over here, it may encompass this. But then what happened when it came down into this imaginary zone that I'm talking about? It pumped higher. And then where did price action pull down to? It pulled down to right around here, this zone. And then what happened when price action pulled down? It pumped higher. So what do you think is going to happen?
Right.
Yeah, this is called trend continuation. Let me move this so y'all can see it. So all we doing is we're being reactive. We're setting up this deer trap, as I was talking about. We're gonna wait. We put our zone over here because remember the rule. Once the price action breaks through the most recent major swing level, that's where your eyes want to go to continue trend. So that's where you put your rectangle and you anticipate it over here in the next day or two. So price action is going to go up. It may have already, well, yeah, we know what happened today. That's what I'm going to explain. So it pushed back down into this zone. And then what happened? Then the way that I trade, now once I get this, I think somebody's coming in. Let me see.
Somebody there. Oh, Chuck.
Chuck there?
Uh,
I can't see. Is that who?
What's up, Chucky?
What's going on?
Oh, that's Chuck. What's up, dude?
I just got off my other Zoom.
Oh, okay. Well, you're a little bit behind, but you can go back and look at the video. So we just talking about how you draw this up on the 1 hour or on the higher time frame. Mine is the 1 hour I use, and then I click down. So after you get this all drawn, you got your trend set up and everything. This is Costco today. You had success in this call too, Chip. So then you click down to the 5 minute time frame. 15 minute in this case. Okay. Let's pull back some. So y'all can see it. Right? Need some more days on this. 90 days. I just need to save this. Okay. So now we got time. You can see. Okay, so you can see our trend that we did on the higher time frame. I'm just going to isolate this major swing level that I've been pointing out. This major swing level, that the most recent one that got broken, price action broke through that. So I'm gonna capture that. I'm just gonna zoom in from that all the way over to where price action stopped today. Okay, so here we are on the 15-minute time frame. So now, Keith, we put our triangle up here, and remember, this is just some subjection because we don't really have no rule with this. You do want to just kind of capture the trash. I call all this right here, this price action, this resistance and support, I call it trash. Sometimes you may see something in the after hours. If it's inside, if it's right along with your peak or a little bit, some of these bodies, you want to capture it with your zone. See how much I captured with the zone? I can adjust this. Because that's all we're looking for is price action to come back into this. So now on the 5 minute time frame, you can see, boom, price action broke through the major swing level. That's where our eyes went, and we put our zone, we put our rectangle up, and then we have a major swing level up here. All right, which means price action came back down. Where did it come? It came back down into a major swing level zone over here. Okay, this is considered the first bottom.
Oh, okay. That's what I didn't know. Okay, you count that as the first. Okay.
Okay. Because what did we have? We had a breakthrough. What am I saying when we say breakthrough? The breakthrough was the major swing level, the most recent one. Because remember, we got others over here. Here's a major swing level, but which one was the most recent one? That's where our eyes go. That's where we do our rectangle. And when we broke through it, now all we doing is saying, well, we know it's going to come back to the zone. We know it's going to, so when we come back here, my alert goes off. Bang. What does my notes tell me? Look for a second double bottom. That's all my notes will say right here. Okay? Because some people get in, some people look for buying volume right here. That's 15 minutes, 30 minutes. That's 45 minutes. That's an hour's worth of positive volume. Some people jump in right here, and that's not bad. It's not the most accurate. And I know that I'm down, I draw it up on a 1 hour, so I want to be super accurate. So I say, well, I have taken some trades right here when I get an engulfing candle or a real powerful candle.
Right.
And I just weather it because I know it's going to come back. So now let's talk about the double bottom. The double bottom is called that because it looks like a W. It's the points of the W. Follow my cursor. We come down, there's the bottom of a W. We come up, And then we come back down to the bottom of another W, and this is where I would enter. And then bam, we off to the races.
Well, see where you at, would that be a triple? That's a really kind of a triple bottom because you got right
I'm
in the middle of the bottom.
gonna show you something.
Okay.
Show you something. So remember when we did a zone on the 1 hour, our rectangle came from the 1 hour time frame, didn't it?
Yeah.
So now that once I get this first major swing level, because that's all this is, right? A major swing level when price goes back up. We got this first double bottom. So what I do many times is I will either erase this, I will remove the drawing, I will remove the rectangle. And now that I'm on my 15-minute and I got my first, let's just say you don't see nothing else but this right here and you saw it going up. What I do is I zoom in and I say, okay, this is my, now this is called my termination zone. And you want to get the body of, you want to get all of the wick. You want to get all of the wick and the body that's in there. So you'll see, I get all of the lowest wick and then up to the bottom. Now this is my zone. And if I hover over it, you can see what my alert is going to be. 550, 32. You see the start of this rectangle?
Yeah.
Hover over it again. 551.64. So I put an alert now, just waiting on the double bottom. Now, what can happen with my double bottom? I'll tell you. That's why I say that first rectangle that we did, it's cool, but I'm waiting on the second signal.
Okay.
So let's see, let's remember 551.64. Anything now, a candle can come in here. A candle can come in here. A wick can come in here, but a candle cannot close below the zone. This zone right here, a wick can come in here and close, and we're ready to go. I'm looking for a rejection. All I'm looking for now is rejection. And that means, let's extend this. What does rejection mean? Rejection means I'm looking for a candle to come in here. I'm gonna extend. Not exactly, but I'm looking for one of these candles to come in here with a wick.
Yeah.
See what I'm saying? So this would be my first bottom, right? Because I found the major swing level, and the major swing level is anytime you get a point and the price goes back up. It's like the bottom of a W. But I'm looking for the second bottom of a W. So I'm just patient. I set my alert and I said, bang. This one actually came in. I think this is where we got in today. So let's do this. So let's say that wick just came in there like I took this today. So you come over here to set your bottom of your body and the wick. And then anything that comes in here, and a wick can come in here, and that is considered rejection. It came down into the termination zone. It closed in here, or a wick came in here. One thing that cannot happen is it cannot come below my zone. If it comes below my zone and closes, then now I have a new first bottom. I reset. That's not my bottom. That's not my second bottom. But if this happens right here, I would wait for this candle to close, and then that would be my entry. And the way that I enter these guys, this is a price tool that I made Fibonacci. The way I would enter these, I would wait for this 15-minute candle to close. This is buying volume. This is my double bottom. And then I would, at the top where that closed, many times I wait and I get in about 10, 15 minutes, or maybe I'll get in today. I think I got in 30 minutes. So I got in at that candle. But anyway, that's when I sent the alert out anyway. So I would put my entry right there. And then I'd come over here, actually, because I got Costco tells me that on a 15-minute chart, by the way, you can click this cog and customize, and then you can come to the ATR right here. Well, you have to look it up. You have to look it up. You have to look it up, ATR right here. I just want to do all this. And then once you pull it over here, if you don't have it over here yet, then add it. ATR, and you add it. Okay. But what I do is I got it set on my entry at 15 minutes. And depending on what time, what chart if you was trading on the day chart, obviously we know what the ATR is for day, but we don't need a day. That's not the time frame I'm taking. I'm taking the 15-minute time frame entry. So I want a 15-minute ATR. So what that's going to do is going to take the last 15-minute candles, 15-minute candles, and it's going to average those down for me. And it does it right there. So it's telling me, Gerald, and I round this up many times like $1.10. So it's telling me that I need to provide enough room to breathe for $1.10. So I will take the $1.07, I'd round it to $1.10. And then I would come over here. If this was my entry, I look for, and another reason, another pro to trading on the double bottom is many times you don't have a large stop loss. So if there was a wick, if this wick, like I would do this, I would do my stop loss from right here. So I would calculate, you can look at this candle low. The low of this candle, if you know where to look, it's up top. The low of this candle is 50-50-84. 50-50-84. So I said, what do I say? 50-50.84. I want to go lower, my stop loss to be lower than that by, what did I say, $1.10? Minus $1.10. So that tells me that they're saying, oh, I did that one. Let's go back. $1. Okay, so that's telling me my stop loss needs to be at $549.74. Okay, so if I'm taking this entry right here at the top of this candle, I would stretch down and look over at the right. You see the margin over there? I would come down to 549.74. Oh, I'm right there. Yo. So there's my stop loss based on this swing low. I always take the utmost major swing level. That was my first double bottom. If this candle had a wick that came way down here, I would go down there and I would do my math. I would do my stop loss from there. But I always take the utmost lowest out of my termination zone. And I give it a little room to breathe because it's telling me my ATR for, you know what I'm saying, this time frame that I'm entering. So now what do we have here? I've used the Fibonacci's as my price tool. So I know what my stop is, 549.74. Now up here, if I wanted to take a 2-to-1 on this trade, I would be going to the 300. So my target would be 559.95. And that's a 2-to-1 trade. Well, you say, well, Joe, that's saying 300. Well, you gotta remember, this is where we entered at the close of this candle, right where the 100 is. So this from 100 down to my stop loss is the 1. So if you go from 100 up here, there's 1 where the 200 says, and then up here, that's 2-to-1 where the 300 is. Does that make sense?
Yeah.
Trade, I would be winning if I came up here, I would be winning 2-to-1. And you want more than a 1-to-1 trade. Okay, a lot of times you can go 1.5-to-1. In this case, we're doing continuation trend trading. So, but we know that if we've identified the trend and it's an upward trend, we know that prices are eventually going to push higher than what the high is right now, until it drops down below and tells us that, sellers are coming in and the trend is changing. So there you go. You got the price tool. Now what we've done is we've done CEST. We've done the conditions on the higher time frame. We've drawn it up. We found our trend. We've done our entry. We waited for price action to come into our termination zone, which is this other triangle that we drew on our lower time frame. And again, it's only based on finding this major swing level, and then getting either the wick and creating a termination zone, and then just setting an alert. Now let's go over that because I didn't do that. Got ahead of myself. The alerts that I set are pretty much like this. Let's get that. Basically, once I do my termination zone right here, I hover over it and it tells me what the rectangle start is and what the rectangle ending is. You can see that. Let me do it again. Did you see it?
Yeah.
So let's say my rectangle start, and I'm waiting on price action because I got my first double bottom. Remember the bottom of a W. So I know it's going to go up here. This part right here is called the neck.
Mm-hmm.
Comes back down, and then when my alert goes off, that means something has come in my zone. And when my alert goes off, let's say my alert is 552.02. Okay, so I right click, I come down to set alert. You'll find that you start doing everything on the computer, and you can do it on the phone, but it's just a little bit hard. You can't take notes. You can't put notes.
Yeah.
What I said was 552.02. So I come to create alert. And I'd say 552. I just put it in here. 552.02. Hang on, let me plug up. Power getting a little dry. Yeah. Okay, so we got 552.02, and then right here in the notes column, I just say something like, look for double bottom and rejection. Many times I copy it and I paste it depending on, and then I'll change a word if it's I say look for first double bottom or look for rejection or whatever. So then I'll just create that. Bang. And then I'm done. When price action comes there, my alert go off. I read the note to remind me, And then obviously I look at the chart and it's like, oh, okay, I see this. And then now what happens is here we are right here in this area. Okay. So now my alerters went off. It's told me in my notes to look for the, the second double bottom, and rejection just means it does not close below my termination zone. These price needs to come in here and be rejected. In other words, also the candle can close in here, the wick can close down below it, but the body cannot close. The candle body, sometimes the candle may start down here and then the buyers come in and they push it up and it becomes a wick. And just the wick is down here. And by the time that candle closes, that 15-minute candle closes, it's in here, like in the middle. And then you get green sellers coming in here. And that's your entry, So that's called rejection. Many times it closes below it and you got to start all over. It's like, okay, well, I'm glad I didn't get in because I'd be $300, $500, $600 negative. It keeps just dropping on me. It's like, yo, what's up? So that's not how we trade no more. We find the bottom on as much as the bottom as we can, the utmost bottom, and then we take it from there. So today we got in, I think we got in, I don't know where we got in, I have to see. But anyway, you see what happened. We didn't get
We got in on that second.
right here because it would have been stopped out. So I must have got in, I don't know, I had this probably drawn up a little bit different, I don't know. But anyway, you get the gist. But see, what happened right here was we did not find the utmost bottom, because if I'd have got in it right here, I would have been stopped out, right?
Right.
So I know I didn't get in. Anyway, we were close to the bottom, and many times this happens. That's why you want to make sure you give yourself a little bit of room to breathe from the lowest major swing level. But you can see the success we had today was once we did take off. This was done close, mostly during the power hour, around at 3 o'clock Eastern time. It ran, but since we found a trend, you can know. Now this may pull back a little bit more, but where is it going? It's going higher than right here. It's going to end up higher than, because we're still in an upward trend. It's going to end up higher than this candle right here at 566.75. So that's an example of just drawing it out, completion. CEST. Do your conditions, find your conditions, then you wait for your entry, you set your stop, and you set your target. You can do all that in one. I can go through that too, because you need to know how to do that on here. But we can draw up another one. I think that's probably the most important thing, drawing up another one so you can see the major swing level triangle, and then when we go down to the lower time frame, putting in the termination rectangle. I keep saying triangle, but rectangle. What you got, Keith? Question?
So when like that little wick came down that we were looking at and it broke your box, that's starting a new trend, correct? Because you broke that trend because you got a new low and low, right? The one, the candle all the way to the right, yeah, right there. So because like when you were drawing your trend, so that red candle that went beyond your box, that broke the trend to say we're not in the upward trend no more. Even though we are, we just got to start back over. Is that correct?
No, we're not. It didn't break my trend line. It didn't change trend, because look where my trend line is now. See this yellow perforated line?
Right.
If price action dropped way down and broke through there, then now I know that the trend has changed, and I would probably make sure that it doesn't go back above it. You know what I'm saying? I'd wait for a retest and then a drop. But that's telling me that the buyers and the sellers don't know which way this is going. So, and then again, the way you find that is as you draw your structure on the higher time frame, this made the most recent major swing level that price action broke through. That's where we did our first rectangle and on the higher time frame, and we bought it all the way over. Right here, you would look down here like this V. The most nearest price action bottom, that major swing level, that's where your price action cannot break through or the trend has changed.
Oh, okay,
So if you look, let me zoom back.
okay,
Look right here, this is what we did.
okay.
We started down here, we got boom, we got a major swing level because we pulled back to this lower, this higher low. Then bam, we broke through this major swing level. Now, if price action has stopped and we was drawing it up from right here, we got a lot more data though. If we were just drawing it up from right here, we will be looking to this most recent major swing level to put our rectangle.
Yeah,
But since we got so much more data, we don't stop there. We just make a note. Okay, so we had a pullback right here, and then bam, this is our most recent major swing level that got violated. Price action came up here, and then we consolidated. Here's consolidation because why? Because we didn't come back down and break this major swing level, which means trend change. And we didn't continue higher and break this trend, major swing level. Most recent swing level that we broke was right here, and that's where our eyes want to go. All this is consolidation until the market tells us, yo, we're going to push higher and we're going to break this major swing level, or the market says we're going to come down here, bam, and we're going to change the trend. Always look to the most frequent major swing level. Then down here for the trend change.
okay.
If this was flipped, it would be reversed. We can do a bullish for puts, but it's just, and that's where I would encourage you all to engage more in those videos, because everything that I'm saying is literally verbatim, literally, dog. You're gonna hear the same verbiage, the language, the phrases, everything. I'm don't change nothing.
All right.
So that's why I'm saying, if you want this, then focus on his videos, because the other stuff may be similar, but it's just adding on, and you don't really right now until you get it. You don't need add on. You know what I'm saying? You need to get it.
See, one thing that kind of worried me was how, like you stressed, so like you said, that box that you drew, and that's why I wanted to be sure on that box. So you drew your box, and like you said, so I want to be in size of box, but there is your box has to be a certain way, because if that candle closes, beyond that box, then you got to scratch it out and start over. So I want to be certain on how you draw that box, how far I can go up and down. So
Well,
I think that's
part. This box on the lower time frame is called a termination zone.
right.
Okay, this box is legit. This box, you read, you hover over it with your cursor, and you say, okay, I'm getting these numbers. Now you don't hover over the pip itself, because the pip is not what you're waiting on. You're waiting on price action to come into the zone. So we're gonna draw up another one, because this one is more important. Let me go back to the 1 hour time frame. The termination zone is more important than this one that we drew up, because the first one we drew up was just, we find the most recent major swing level.
Mm-hmm.
And I'll just zoom in right here. And we did this right here. Now this is subjectional. This is subjectional, meaning obviously it's personal. You say, okay, I just kind of want to get an area of where I'm looking for price to come back to. And you see how I got this trash in here? I call all of this trash. You got these pips right here. And then I see like this wick right here. I want to get that wick. You don't want to be so big like this. You know what I'm saying? So you want to take the price, the peak, the major swing level is your guide where you start. So sometimes you come down, sometimes you go up, depending on where the trash is. The trash is where price action is gonna have trouble when it comes down to it. You get this peak right down there, and then you come over here, and you just, so this is all subjection. There's no real rules to this. Now, when we go down on the lower time level, when price action comes down into that, that's where we want the more accurate one, because that's going to determine when do we pull the trigger, do we get in, are we seeing what we're seeing. So let's leave this one because it's a good example, but let's show you it on a different chart. We can move faster because you got the general adjust. Let's do this one that's AZN. Look at that, it's stat. Or you wanna put, we can do a put. Well, I don't want to confuse you with the put.
Yeah, I'll do a put in. Right.
You breaking up, what you say?
Yeah, keep it on the calls. Yeah.
Okay, let's clear this chart. Clear draw and set. So on the 1 hour time frame, you can see when we pull back, we're in an upward trend. We looked at the histogram over here. Where the
I
histogram,
think Kamisha text was our meeting tonight. I don't know if you could respond to her or not. It came through my thing saying, was we on a meeting?
oh yeah, tell her that we wrapping up, but I did take it. But you can see AZN, this one I do not have highlighted. It's all stacked, the histograms are blue. This thing is running.
All right.
And the chart pretty much tells us that. But that's fine. I love it like this because look what happened today. Look at that, bro. We'd have caught that joint. But what does that tell you? That's telling me that this is going to come back. It's going to come back down to pump. Going to come back down to pump higher. So what I do is I come over here. I usually like to start my trend line kind of like up so that I can break a major swing up. I start up to come down to go up. So bam, I just broke a major swing. There it is, just broke it. I'm gonna go to right here. Well, I'm gonna go a little higher. This one is pretty much straight up. So this is, again, this is just all subjectional. So this is why I like doing it on the 1 hour, because in 4 hour pitch, they'd be like, did I miss a swing line? So I'm just gonna do this because I want to create a swing line. Remember I said the pullbacks have to be somewhat of a pullback. It can't just be right here. You know, that's not a real pullback. I would pass that up and keep going up. But I do want to create a major swing level in here. So I'm just going to make one kind of right there. And that's legit enough. So price action is going to break through there. We know. So bam, we just broke that one. We'll go to a higher high. So let's take a look at it. If we didn't have no more activity over here, our eyes would go to the most recent major swing level that got violated. It got violated right here. Right. The reason why I didn't come over here is because that's consolidation. I'm looking to break through. So I'm always looking to break through the pullback. That's why my eyes go up here. So now I'm gonna create another one because if you can see this that little dot right there.
Yeah.
Let me zoom in. See,
Yeah,
that counts. That's it's gonna be a major swing level, and then we'll go from here on up, and you'll see what I'm talking about. So, let's pick it up from here. We're creating a major swing level because that's a legitimate pullback, right? And then now, did we break through? I'm gonna stop it right there. Not really. So I'm gonna keep moving because it's really consolidation.
Right.
We did that and then came down here. But I mean, we can. Again, I just want to show you.
Okay.
So when, like, if I was gonna do my triangle, my rectangle, I would get this rectangle, I would get that rectangle, I would get some of this trash that right there. because I know that this is support. When price
Okay.
comes down to here, and you'll see, let's keep marking it up. Now that tells you that that's a strong floor.
Right, right.
Then I come up here to where it stopped today. So now, what is our rule? When price action breaks through the major swing level, this is where we look for our rectangle. This is where we look to create more, continue the trend.
Okay.
I will put my triangle, I'll start my triangle right here. And again, this is subjection. Subjective. This ain't support. So I would get this trash. You see how I'm coming up here getting these little pips in the after hours?
Yeah,
Because what am I thinking? I'm thinking that when the price action, because we know it's going to pull back. It's up there, it's up there at that cloud. What is that? 66.06. But in order for this to pump higher, we know it's got to pull back. But where does it pull back to? It pulls back to the major swing levels. And guess what? We got two of them. We got one right here. I mean, I can extend this on over because I know, I mean, our rule is to look for the nearest one. That's right. But man, just to prove the point, just to prove our point, you see, we all over here. That's a floor, man. That's like a wooden
Right.
floor.
right.
That's called support. So price action is going to come down and it's going to come somewhere in this zone. Oh, what is that? It's going to come in this zone. And then once it comes in this zone, whenever we get a major swing level in here, and what does that mean? It means when price action comes down here, that's Jeff. It means whenever price action comes down into this zone and goes up, we're gonna go on our lower time frame and we're gonna get that termination point right there. You know what I'm saying? So I want you to see this first rectangle, Keith. What's up? Who's that came in? Cavs?
Yeah, man, I'm on my phone.
What's up, dude? You can go back. I'm taping it so you can watch the video.
Oh, you taping it?
Yeah, I take this whole deal.
Okay, cool, man. Cool. I'll catch up to you later.
Okay, bro.
All right, thanks.
So again, we're on the higher time frame. This is where we find our structure. In other words, it's where we do our trend lines and our first rectangle. Right now, we're just getting this rectangle, and I like to call it trash. You don't want to make it too big. All we're doing is setting this up. Once we got it set up, we go down to our lower time frame. For me, that's the 15 minute. So now what are we going to anticipate? I'm going to pull back. All we anticipate, I'm going to get this major swing level and where price action stopped today. All we're anticipating, because we know the way stocks move, man, it had a heck of a day today, AZN.
It did.
But we do know we're in an upward trend and we're trading trend continuation. We got our major swing level. We know price is going to pull back somewhere down here. It's going to drop. I'm going to hover over this. Somewhere around now, what I have found is that sometimes it may not pull all the way back here. It may pull to this trash right here. This may be enough support. And it bounces off of this. And it may not come to your major swing level because, man, hey, again, it's subjective. Maybe your rectangle should have included some of this trash. Again, as you draw these up, you'll begin to get better and better at them. But I have seen price action come down to around here and bounce off of all of this. This is support too.
Right.
You know, bounce off of this, you get your double bottom and bam, it take off high. I've seen it and I'd be like, daggone. My alert didn't go off. My alert didn't go off because I didn't have my, this subjective rectangle big enough. So
you know what? While you said it, I did that today, Gerald. It was funny. I was, off the maps I did, but I had BP. And off your 20 day, because I use yours, you got a 20 and a 50 day, so I kept the same thing, 20 and 50. So I saw it had a double bottom on that on my 20, but it wasn't in my box, but it hit the 20. And I was just playing around, but I just put one contract on there. So it's kind of like what you're saying. It wouldn't hit my box, but because it was a second bottom on my 20 day, I went on and took it because the trend was following. It seemed to be following that 9 day. So I knew once it hit my 20, kind of like what we doing now, using that 20 day as a resistant, like you did, but it didn't hit my box yet. So I just went, okay, I got you. I just threw that in there.
Right. So like if I got a wide box like this, then my alert will go off if it come down to any of this trash right here. And so you can make it bigger. All you want to know is when price action come down, sometimes you may be looking at it. So and again, this is just how I go through the whole deal. I would set an alert, and you can see the beginning of this rectangle is 64, 64.4. So again,
what about, remember last week, I think when you was putting this in our head, remember you said sometimes to be sure, sometimes you wait on that third bottom for confirmation. Did you say that? Sometimes when it hit the second bottom, I think if you want to make sure just for verification, I thought I might be wrong. No, I thought you said you wait for a triple bottom instead of a double bottom sometimes.
Sometimes, if I just want to be super cautious. So right here, and remember now, man, I'm on 15 minutes. I don't want to be on 15 minutes doing this. So let's just say, okay, I'll go back to. So yeah, let's do this. So if I'm on the, let's just make believe that I'm on the 1 hour. I would say look for first. Look for first bottom.
But you already got that though, don't you?
No, I don't have no bottom. I'm gonna leave this for tomorrow. This happened today. This is how I just draw them up. I come in and draw these up at night. This is all. So tomorrow or the next day, guess what's gonna happen? Price action is gonna come down into the zone, and then it's gonna give me a first double. My alert's gonna go off, and it's gonna say look for first double bottom. Hadn't come down here yet. Look, price action just broke through. See the white trend line? It just broke through. It pushed through today, yesterday, towards the end of the day. No, all of yesterday. And today it pumped high. So tomorrow or the next day, it's gonna start falling. Then it's gonna hit my zone over here, this black stripe. I can extend it. Let me show you. So over here, the next day or the next day or the next day, I don't care.
Right.
Whenever it come down, bam, my alert's gonna go off and it's gonna tell me to look for the first bottom. And the way that I do that is like I showed you. We need to talk about that again. Is it'll come down, and let's go back here and let's act as if this. Let's act as if this was the first bottom. Okay. And I'm on a 15-minute time frame. Let's say that there's no more. You see this long wick right here?
Okay.
So we're going to act as if this is price action that has just fallen and it's coming to my zone, and my alert went off. As a matter of fact, I'm going to delete the rectangle that you draw up on the 1 hour getting tight. Better yet, let's use this one, because this is a major swing level. So this is what we will be looking for when the price action comes down. A major swing level, remember, is when you get the lowest low or the highest high. It's the bottom of the peak or the top of the peak. They call them major swing levels. Okay, so once the price action comes down and then takes back up, I know now that I have my first bottom. Remember, the bottom looks like the capital letter W. And there's the bottom of 1 point on the W. So I would be looking now. Now we're talking about, remember the term termination zone. So when you're on your smaller time frame and you get that first double bottom because your alert went off, now you do want to be precise. This is objectionable. We have rules for this rectangle. And the way it is you find the major swing level, which is the lowest, that first bottom, and you go from the body to the wick. You see that?
Yeah.
And then you would stretch it across as far as you need to stretch it. You would stretch it across as far as you need to stretch it. You would get the body, you get all the wick, and then the lowest body, because it may not be the same. It may not be the same pip. The pip next to it may have a deeper body, a lower body, but this red one has the lowest wick. So you get all of it, and again, this is all in the video. You get all of the wick up to the lowest body. And then now, again, this is precise because you're just waiting on price action to come back down to that termination zone and be rejected. And what does that mean? You can have a wick come down here and touch it and then get green buying come in, and that's where you would enter. You can get a body, a red body to come in here, but it has to close inside of the termination zone. That will constitute your second double bottom. And then rejection means you got buyers coming in for the next 15-minute close pip. If you was trading on the 4 hour, if you were drawing it up on the 4 hour and then going down to the lower time frame of 1 hour to take your trade, you have to wait for an hour pip to come in here and be rejected before you enter. That's why I was saying earlier that your trades, you get more trades doing it in the 15-minute. You just probably want to make sure you wait for double bottoms because you get more accuracy from double bottoms versus just jumping in from the first bottom once you see green buyers coming in. So
Okay, so that so that box right there, you extend that all the way over, and that's your pullback zone, right?
this is your termination zone. This is your double bottom zone that needs to be exact. The first rectangle on the higher time frame is subjective. You just kind of want to include the trash, as I was calling it, and then you want to set an alert to get your attention. You know, like I'm saying, you want to set an alert to get your attention. This is, again, now look up here, we're on the higher time frame again. Price action did this today. It's way above the major swing level, but we do know it's coming down there. It's going to come back. It's coming back to it. This one is this is not rules based. You do want to get the point of the major swing level and the wick, whatever, and kind of want to open it up. This will become, kind of second nature of how much you need to get or how little you need to get. You don't want a little bitty box like this. Your alert will never come up. It may stop, 20 cents above you and take off. So you kind of want to see where is the support? Where is price action going to come down to? It's probably going to come down to somewhere around here, but that's where you want your alert to go off, because then you'd be down on the lower time frame and you draw your termination zone in once the major swing level happens. Okay, it's going to take you hearing this over and over again and going through the higher time frame, and then setting up your termination zone. Sometimes, again, like when I go down to the lower time frame and I'm waiting on the double bottom, many times I delete this. This has served this purpose. I remove that rectangle. And now, once the price action came down and then it went back up, now I would be putting my termination zone down there more precise, getting all the wick and the lowest body, and then extending that over and just setting another alert, waiting on the price action, a wick or something to come in there and be rejected.
I think I got kind of more confused. So you got a termination box, and what's your other box?
Major swing level box.
Okay, that's what I keep getting mixed up. Major swing. Okay.
Don't try to go hear another voice.
No, I'm just on you.
Huh?
No, I'm just staying on your boy. But I just thought that one box, I didn't see him do two boxes. Maybe that's why I'm getting lost at. I thought he
He did.
like he did too.
Mhm.
Okay.
There's so much value in there, man. Like I said, I've watched it over and over again, and I see so many different things. Go in there. Just so it's for the record, and it's on this video. The guys, the YouTube channel is called
Trading View.
the Trading Channel, TTC.
Yeah, trading channel. Yeah.
TTC, the Trading Channel. And the first video this is all support and resistance trading. That's all this is. So look for the first video that you want to watch. Let me pull it up here, and I can send it to whoever wants it. But the very first video that you want to watch that kind of gives you what I call the whole meat and potatoes of what we just went over. It's called.
I think that's the one you sent out. All you need to know about trading.
Just the one that I sent out, but I want to put it on this video so if I didn't send it to them, they can see it. It's called. Here we go. It's called The Only Day Trading Strategy You Will Ever Need. Again, it's the trading channel. The guy's name is Steve Hart. TTC YouTube channel, Steve Hart. The only day trading strategy you will ever need. That's the meat, that's the engine, the meat and potatoes of what you just saw. And his channel is pretty extensive. And once you get that down, then go look at the other videos that are on support and resistance. And it's on this channel, and it's just gonna provide, more confluence, more boxes to check, give you more confidence in trading. But this has been super successful, and we having a ball with this. So I'm glad I got this on video, man. Like I said, keep practicing it, man, and back test it. Play around. I go on demand. I use the on-demand feature, and I'll go back some months, and I'll draw some things up, and then I'll take a trade, and then I'll speed the price action up. You can just be like, "Am I right? Is it going to do this? Was this a double bottom?" And you can test it that way. Because on demand, you can just do trade after trade. And in 20 minutes, you're going to do 3 trades, and you see the outcome.
I'm not familiar with on demand. I gotta find out what that is.
On demand is a feature you see right here. Click the on demand, and it's basically like a paper trade without going over to the paper trade. So they ask you a question right here, basically. You just say, okay. And then all of a sudden, it's not gonna let me do it because it never lets me do this too much on when I'm streaming with YouTube. But anyway, you can
Yeah.
see right here, this burnt orange or whatever this color is, says on demand. Same thing. You work this the calendar right here. You click on the calendar. I can go back, I always go back to May 2021. So if I say, let's go to the 3rd, I can put the time in here. It's military time. So you can go back to the beginning of the market, and I just go in here and practice.
Oh, that's cool. Yeah, I didn't know it did that. I saw that key, but I didn't know what that. Okay, thanks.
Yeah, go watch the videos on, man, look, bro, this thing is so off the chain. So I go to around 9:30, 10 o'clock, and we can put in this ticket.
Okay.
Sometimes it takes, depending on how much information you're trying to load, or if you low time frame, like a 5 minute. Let's go back to the hour time frame. So everything's the same, but it's just paper trading, but without going over the paper trade. And the way you get, you just click back on demand, and you'll go back to your account. So let's say I wanted to chart this up. I'm surprised it's letting me do it. You know, I do the same thing, work it all the way through. Once I got it done, you know, I come up here, you got the fast forward buttons. You can see the time clicking away right now, 9:59. So you can just fast forward. Many times I come in here and I go to the next day. And say I said I had an expiration of the 7th, May 21st on the 7th. So I'll see what happened on the 4th. And then I'll hit go. You gotta watch your time though, because that's at 15. I say I want it at 9 o'clock. But you know, I didn't put nothing in here, but I'm just saying this is just how you do it. Pretty self-explanatory.
I got it. And I mess with that. Okay, that is. I seen that used on Trading View before somebody was using it. But yeah, I didn't know we could do that. Okay.
I ain't hear nothing there. So you got it. One thing I'll caution you on this is that sometimes it's slow, and sometimes it may not even work for you. But again, YouTube, there's a video to tell you how to change your memory, and not your memory, but your speed when you first coming into TD Ameritrade. When you first booting it up,
Yeah.
there's a video. So if you can't function on demand, or it's super laggy, then again, go to YouTube and look up some keywords like speed up on demand or something like that. And this guy's had a real good video on that. It's real simple, and he'll walk you through that as well. But the on demand feature, man, gives you those reps. You know, you need those reps to get the confidence. And you ain't got to sit there all day. You know what I'm saying? You just go through them.
Right. That's cool. Okay.
All right, big dog. I'm gonna go eat something, man.
Yeah, I'll do the same thing. I appreciate that.
All right, little bro, that was good, man. I'm gonna watch the video.
Oh, okay, Chuck. I didn't even know you was there. Okay, yo.
Yeah, I thought he left. All right, Chuck.
All right.
All right, y'all. Peace.
Okay, thanks. Night.